Hello, Happy New Year, and welcome to a very, very special episode of The New Frontier, and one that I've personally been really looking forward to. It's an incredible story about a D2C founder who scaled a business to 50 million ARR, had several offers for exit, just shy of 100 million, and then had to manage a hostile investor takeover. So without further ado, I'll bring on Daniel. Daniel, how are you?
Yeah, good, thanks, Max. All things considered. How are you?
So I'm good. As I said, I've been looking forward to this one, honestly, because I think it's what you've gone through has so many lessons for so many other founders. And as we briefly discussed before the call, like the majority of the people listening to here will be e-commerce business founders like yourself, but we also have some SaaS founders as well, like yourself, kind of in your new venture, which we'll come to at the end. But maybe just take us back to the beginning. Like what started your entrepreneurial journey, and what was kind of the mission behind Ruroc?
Cool, yeah. So my story is actually a little bit weird when it comes to the founding story for Ruroc. So to be completely upfront, I'm not actually the true kind of inventor and founder of Ruroc. Ruroc was invented by a bit of a mad Scottish guy in 2006. He raised about $1.5 million and went bankrupt within a year and a half. I think he then raised another $1 million and went bankrupt again within 2 years. So Ruroc went through 2 bankruptcies and £2.5 million before I ever even heard of the business. Mm-hmm. My entrepreneurial journey started coming out of university. I'd set up a couple of like student events businesses and a late night alcohol delivery thing, which was kind of like DoorDash before DoorDash. But both of those businesses were based in the building where Ruroc was. Ruroc went bankrupt the second time. This is 2010. And 2 high net worth guys bought it out of administration for about £5,000. And they had zero interest in actually running the business. Ruroc at that time had just sold helmets to McLaren Formula One and Red Bull Formula One. And so they were under the impression that they were going to have like pit crew access. So they were only interested in the business from like the special VIP Formula One treatment they thought they might get. Anyway, long story short, they wanted someone to run the business. I was in the building that Ruroc was in. They hired me as employee number 1. It was doing 0 revenue. Took it to $1 million within a couple of years. And the 2 guys who had bought it, who were 50-50 shareholders, had a falling out. They fell out so bad that they refused to even get on a plane together to go to a trade show that we were due to go to in Munich. And I said to them, if you're not interested in running the business, we need to raise money, and I'd be willing to work out how I could buy you out. And so I went around to friends, family, got a load of people to take personal loans. And for £160,000, we bought Ruroc off those 2. So that was 2015. Wow. Yeah, so it's a very random story. It's not like I came into it thinking I want to change the world of helmets.
Wow. So much of this, in my opinion, is luck, and it's kind of like you in the right place at the right time. It sounds like you kind of fell into it. So maybe do you want to just explain like what it was when you came in as like employee number 1, and what your vision was and how that kind of grew?
Yeah, so as employee number 1, it was literally a case of I had to assemble helmets, which I'd never done before. I had to pack and ship helmets. I had to create the marketing strategy. I had to basically do.
So it was just a helmets business at this point?
It was purely a ski helmets business. And we were manufacturing them in Gloucester in the UK back then. And so, yeah, it was literally a case of you've got 20 boxes of components for helmets. If someone orders, build it and get it shipped out. And that's what I did. And then from there, kind of self-taught all of the kind of social media marketing side of things. Is one of the reasons they'd actually hired me, to be fair. I'd managed to get quite a lot of traction in my previous businesses on social media. So was kind of good at that. Learned the ad side, and pretty much for the life of Ruroc, I then managed the performance marketing side of things as well.
So, what you have a kind of a smallish D2C business at this point. I think you said like $1 million in revenue, roughly.
Yeah.
What made you think that going the venture route was the right way to take D2C brands? Because most of them we work with I work with e-content are not venture-backed businesses.
Yeah, I mean, I highly recommend people in the D2C space don't go the venture route. To be honest, Ruroc is kind of like an outlier in the e-com world, in that you've got a product that requires really high precision engineering, tooling, complex certification that's like international. It's not something that you can just buy off the shelf. It arrives and you can ship it out. So for us, we got to the point where we were doing about 3 million a year in the ski market. We had literally thousands of people asking, can I wear this helmet on my motorcycle? And for us to basically pivot into motorcycle, redesign, re-engineer, retool, set up the supply chain, it was going to cost us somewhere in the region of like £1.5 million. So there was no way we could deliver that without external help. We did try to go the crowdfunding route, and we raised about 400,000 through it was like a Crowdcube platform. And then we raised another 300,000 in pre-orders, but it just wasn't enough. So it's such a capital intensive business that for us, venture was kind of the only way to do it.
And when you say us, how many people in the business at this point?
So at that point, I brought my mum, dad, brother, and I had 2 friends in the business. So there was like 6 of us.
And they're all working full time, were they? Or
yeah, literally full time at that.
So you had this really kind of family orientated and close friend orientated business. And so you went out to raise VC money. Was that in the UK?
Yeah, so it's weird. We didn't really actually go out to raise. We listed on a crowdfund platform.
Yeah.
Had just like a load of fans put the best part of 400,000 in, and then VCs started just popping up and coming to us. And so when we realized we could go the VC route, when we realized there was enough interest, we were told by all of them that they would likely put a chairman in place. So I actually went out to hire my own chairman, because I thought I don't want a VC coming in and just putting any old person in. So got introduced to a load, and one of them ended up introducing BGF, who at the time seemed like a really good group to work with. But live and learn on that front.
So what was that initial investment that they put in?
So they put in an initial 3 million.
Got it. And as part of that, and we'll come on to kind of the fallout maybe a bit later, but as part of that, they kind of had a chairman of the board and all authority on key board decisions. Is that right?
No, so not. To be honest, the BGF are actually known as being a real light touch, and we had a choice between 3 different VCs at the time. One of them had a particularly bad reputation, and so they were the ones who were pushing the most, and we kind of played the 2 off against each other, and went with BGF because they were the soft touch, and their terms of investment as a whole is that they have to stay as a minority, but they do have some reserved matters that they put into the contract, which is where, unfortunately, we're just saying,
What were these reserved matters? Just before we got into what.
There are a few. So there are things like you have to have a chairman, and one of the interesting things about now starting up in the US is just how willing people are to support the business with very kind of little incentive other than to help. In the UK, we were paying, and bear in mind, we were at this point, we were a 3 million revenue business. So we're not huge. And we're not, at that point we're making about 100 grand a year profit. So this chairman came in and was immediately £50,000 a year. You then have the fees of BGF, which for their board member is another 50,000.
So you're paying them to have a board member.
You're paying, so for 100 grand a year, you're paying them, and then on top of that, because we were apparently their earliest ever investment at 3 million. I don't know how true that is. We also had to have a non-exec, so we ended up having 150 grand of cost put onto the business overnight for 3 people who could really add no value.
What valuation did they invest at?
So they took 20% in that round. So I think it was like a pre-money valuation of 12 million.
Okay. So it's not bad. And I guess before we move on, and I want to talk about how you use this money to like an incredible, like just incredible deployment of capital. Before maybe we scare listeners about why you don't want to maybe not raise venture capital, maybe just say like, what were your tips on actually just raising this round? Because it's so hard to raise venture money, especially in a D2C kind of consumer business. So how did you pitch it?
Like I said, it's a bit weird for us because we'd raised some money on a crowdfunding platform. Everything that we were showing was that we were doing like triple-digit growth.
Yeah.
We were really fortunate in the fact that we went from ski into motorcycle, but we didn't have like a wait list as such, but every Instagram post, every Facebook post that we were putting out back then literally had, can I wear this on my motorcycle? Can I wear this on my motorcycle? Is this DOT approved? And so we saw that there was this groundswell of people in a bigger industry. And so it was just really easy for us to just talk traction.
Yeah.
And these days, obviously, as you've been through with Techstars, you're doing this kind of like
dance
show. Yeah, exactly. For us then, it was like, I'd go to these meetings with these guys, having not prepared a pitch deck and just talking about the business and just telling them, this is the reality of where we're at.
In my experience as well, it's when the conversations are almost real like that. They're genuinely interested. You're having a kind of back and forth conversation. You're not kind of just like pitching, this is a team and this is like all this kind of stuff that, like the startup porn will have you believe that you need. It's like, I think the real, if they're genuinely interested, it is like you say, it's a conversation, and because they see the vision. So out of curiosity, like why was there a gap in the market in motorcycle helmets that wasn't being filled and like pulling you in there?
So one of the big things we used to pitch was that if you ever look at a Ruroc helmet silhouette, you can immediately tell that it is a Ruroc helmet. And if you look at a silhouette of every other helmet on the market, it could be any brand.
What does that mean?
So we made this like really aesthetic, kind of aggressive and masculine chin around the helmets.
Yeah.
Sounds very random, but it really stands out. And so we then kind of layered on incredible graphics. We had like
I'm seeing this now. I just Googled it. So it's like a full face helmet, kind of. It covers everything.
Absolutely.
So you look like you're kind of a Terminator or
exactly.
Like this.
And so in the ski market originally, we were like a real Marmite product. We had some people who were like, I totally get this. I love this. This keeps me warm, keeps the wind off my face. And then we had the other side who were like, you're a Jerry, you're a stormtrooper. Like,
you've got these slits in it. It looks like, it does. Stormtrooper is a great description of what it looks like Alien versus Predator type stuff. But I can, that's, almost is what you need, right? You need to be controversial. Some people will love it, some people will hate it.
Yeah, and actually, like that really drove our follower growth. I was obviously good on the social media side back then anyway, so I was able to like attract the big audience. But the fact that people would just argue in the comments saying how bad it is or how good it is literally made us blow up.
Amazing.
So and then going into motorcycle, like the industry was kind of like really stale.
Did you have protection on that? Like, was there like a patent or something that, like, or could just anyone copy this kind of cyborg style helmet?
Yeah, so we had like design rights for the actual shape. We had patents around certain components. So yeah, we had some IP, but in reality, anyone could have copied it. And we did have a Chinese knockoff brand.
Yeah.
Do that.
Okay, cool. So sorry to interrupt. So you've
All good.
got this very unique helmet. The customers are pulling you into motorcycle. You go and raise 3 million with some control terms that you've given away to investors, a chairman, a board member. I'm assuming that therefore, the VC basically can approve all new shares issued, a sale. They basically have rights on any major transaction in the company, salaries for executives, this kind of stuff.
Yeah. There's a remuneration committee and all that kind of.
So you've got this fuel to build this incredible business, but at the same time now you've given away that control over what you can do. And then, but how did you take this kind of 3 million revenue brand into a 50 million revenue brand in kind of like 5 or 6 years?
Yeah, well, I mean, it was actually kind of quicker than that, to be fair. We took the first 3 million in May 2018.
Yeah.
By it was 2021 that we hit, I know it says 50 million on my LinkedIn profile, but we hit about 46, 47 million. I'd round up.
We'll call it 50.
Exactly. So yeah, it was like literally within 2-3 years of taking that first check that we blew up. And obviously that happened during the pandemic as well.
Which is crazy because people, I imagine, aren't motorcycling or skiing that much.
Well, weirdly, we did get a bit of a boost when Trump gave out the $2,000 checks. Yeah. We actually had one of our best days that year on that day. So literally all of that cash just went over to Ruroc.
That's so funny.
Yeah.
Are you living in the US at this point, or are you still in the UK?
No, I was still in the UK back then. I'm now in Miami.
So is the US like your by far the biggest market?
Yeah, so the US from like day one for Ruroc was 50% of the business, with Canada doing about another, I don't know, 12, 15, something like that. So it was majority North America.
Yeah. So how did you hit this growth? Like what did you implement to do this?
So we were I think for D2C brands at the time, we were just way more aggressive than everyone else. And we were way more gung-ho on internationalization and localization. So like 2015, I think it was, 2015-16, we'd just taken over the business. And I kind of realized that in the UK, we were never going to really scale. Back then, we were just a ski helmet. We were never going to scale a ski helmet. I think the UK accounted for maybe 7-8% of the business. And so my logic back then was that people were buying our ski helmet if they had close proximity to a ski mountain, because you're not going to spend $300 on something you can use once, one trip a year. So we knew we had to like internationalize, and actually that was the reason that we ended up not going through Shopify. We ended up building on Magento, which was crazy and hard, but it meant that we could like localize and internationalize really easily. So 2015-16, blasted out to our mailing list. We already had like a few customers dotted around the world. We were selling to about 90 different countries already. And we just blasted out and said, is anyone in Germany, the Netherlands, Poland, France, Italy, Spain, and so on interested in being a social media manager for €300 a month for Ruroc, where all you have to do is translate the posts that we give you, translate the emails that we give you, and handle any customer service? And we had like literally the most amazing followers and fans that have now become like basically they're lifelong friends. They just jumped on it, and within the space of about a month and a half, we turned on 18 different languages and currencies, and we were suddenly seeing like 4 or 5 digit growth in originally small countries, but we France and Germany overtook the UK like rapidly. Poland caught the UK up. There's a brilliant guy there called Stan. Bulgaria, Romania, like all of these places, we just basically treated the fact that people love the aesthetic of our helmet. People in our, in English language markets love our marketing. And so our focus was just internationalize, localize. And it boomed.
Did the product have to change for the different markets, or it's literally you've got the same product and you just
on the ski helmet side of things, there were no changes. When we moved into motorcycle, we obviously had to do totally new certification for the motorcycle helmets, and so like Europe and the US or North America.
You did. My question was more like, so you're kind of rapidly expanding to these different locales. Are you having like new patterns and kind of like styles for like a Polish skier versus like an American skier? Or is it just like it's the same product, you're just literally changing the captions on social media?
Literally that. And like the way we treated it was that like the guy who loves our ski helmets in the US is going to be the same guy in Poland, just speaking a different language. And it worked.
So you're literally like the liquid death of ski helmets. It's kind of, you love it, you hate it, but you've got this amazing branding. And is it all social media, or like any other kind of, is it organic? Is it paid? Like how's it working?
So what we never did, which loads of people still I think do wrong today, is we never really focused on like bottom of funnel conversion stuff. So for us, obviously, we're selling like a $300, $500 helmet.
Yeah.
You're selling something that people, you either like create a desire for it and they actually want it, like they have to have it, or they've just had a crash, or their old helmets died, or they've, just passed their test and they need brand new equipment. And so a lot of those things you can't affect. So our focus was always just on brand building. It was always just on like engaging with the consumer, constantly talking to them. I was always present in like our forums and posting constantly, replying to people on Instagram or wherever they were. And we never focused on like trying to sell today.
Interesting.
And that focus on brand building is ultimately what kind of led our growth.
I love what you say there about like creating a desire for it, and so you're just kind of popping up in people's feeds with this epic helmet. And like, how did you have any targeting? Did you have a consumer, like you said before, it's like a kind of aggressively macho looking product? Could you identify who you could create that desire in, or how did that work?
Well, we just basically blanket broad targeted either skiers for the ski helmet, obviously, and then motorcycle.
So everyone,
everyone, and then we just let them choose. Like we made sure that we were always like front of mind when they're coming to the point that they know they want to buy a motorcycle helmet. Like Ruroc is going to be in their mind. We're constantly like, we would do crazy things. Like in one video for a product launch, we blew up a car.
Okay.
Like it's a phenomenal video if you check out Ruroc Berserker launch. But we would just do absolutely mad things on the marketing side. So we always stood out. We were not like the legacy brands who were focusing on, sponsoring Scott Redding or whoever. We were doing our own thing.
Amazing. So this helped you to hit 1 million followers across everything.
Yeah, absolutely. Each channel had to be treated completely separately. I gave the brief for the TikTok video that ended up, driving us to 1 million followers on TikTok. But it really just came from, I guess, a passion or obsession with sitting on social media and working out what clicks for people.
So if talk us through that example then. So you're blowing up a car. How is that video have to be different on TikTok to Instagram?
So that video came out before TikTok was even a thing, to be fair.
Okay. Pick a stunt and maybe talk us through like how the different channels need to be treated differently, because that's a very interesting insight.
Yeah, so the way we treated TikTok was back at that, it's probably still the case now, but transition videos were like really hot. There were lots of people like I don't know, doing like swipes and then everything changes around and that kind of stuff. So we obviously had like a range of about 15 different styles of helmet that we're constantly changing and iterating. We had different visors, and we had different functionality, like you could attach a Bluetooth system. And so we made these like really cool transition videos that would flick through and show you the entire range, all of the different features and functions. And these videos would just blow up. And there was nothing like, you know, it wasn't like these UGC things where someone's saying, oh, I love this product. It was like, this is like interesting, short, snappy, you see it, and it's a scroll stopper. And scroll stoppers on every individual social media platform are completely different. And we would just tailor, you know, each piece of content to that.
Do you think, and I am very far from being a social media expert, and I actually don't have, the only social media app I have on my phone is LinkedIn, because I've deleted the rest. So I know them, but I don't have them. So do you think there's a different, like it's a different audience? So someone who sits on TikTok is a different person who sits on Instagram? Or do you think the algorithms reward things differently? Or why is it different?
I mean, there's potential that it's both of those things, to be fair. Okay. Like everyone says that TikTok's a younger audience. You know, I'm on it, so it's not that young.
But you know social media, right? Like you're obviously an expert. You built a 50 million business on social media. So you know.
So what's the question? Is it a different audience, or
why are these social media? Why do you need to do different things on the different apps?
I mean, obviously, there's just like a format thing. There's an attention span thing. Like TikTok is obviously pure video. So the kind of things that we would do for TikTok are obviously like these transition, quick change. Like at the end of the day, people are like literally flicking through TikTok at speed. So you need to like shock them with something. With Instagram, you have like a tiny bit more time, maybe like a second and a half, 2 seconds to get someone's attention. So one of the things we did that went viral on Instagram and on YouTube Shorts actually was we kind of innovated on the helmet chin strap. We had this like magnetic clasp, which was again like it was a Marmite thing. Some people loved it, some people hated it, but everyone was saying, you know, is it safe? And so what we did was we bolted the chin strap of a helmet to a motorcycle, and then bolted the helmet to our forklift in our warehouse, and we lifted the bike up by the helmet, and it was like crazy weird little things like that just popped off. But you just have to think about each individual platform differently.
Got it. So if I was to summarize kind of from what you said, and please jump in and correct me if I'm wrong, that what really drove this just incredible growth as a D2C brand, aggressive social media where you're doing stuff like blowing up cars and stunts with forklifts. Number two, you're localizing all of that content across in all the right languages with people who actually know and, you know, are sitting in those different countries and like the brand.
Absolutely.
Number three, everything is focused on creating desire about the brand. You're not trying to convert anyone. You're just trying to like get the name out there. And number four, you got this strategy on the different channels and how you are creating content for them. And number five, it sounded like there's a bit of product innovation as well with like, you know, obviously the helmet itself is very unique and you have this magnetic strap. Is that a good summary of what drove this?
Yeah. It is. I mean, one of the things you touched on about the internationalization, which I should clarify as well, is the level of conversion that we saw once we'd switched the currency and the language on the website, which today probably sounds like really obvious. But the principle behind it was you're trying to say as much as possible in, you know, as little as possible. In like the smallest way possible. So if I'm a Polish guy, and
what did that give you? Because now I'm like, shit, I haven't done that for my website. Like, what did you get for changing the currency and language?
I mean, like literally, you're talking about for smaller countries, we're talking about like 50,000% growth, like year on year. We're talking about, and this is like consistent, where it's going from like a really small base, like, and Poland's a great example. It went from like we would sell $3,000 to $5,000 a year. To suddenly it was like a $50,000, $100,000, $200,000 piece of the business. And the switch was like instant, because if you think about it, if you land today on like a South Korean website, and you see all of those symbols and you see it's in the South Korean currency, are you going to buy? Like, clearly you're not even going to try. Like, why would you trust that? But suddenly for the Polish speakers who've seen Ruroc, they think it's cool. They now see that the social media is written in Polish, the language on the website's Polish, and you can buy in zloty. It's like, okay, like, I get it. They immediately know that you serve them and that you're there to support them if something goes wrong. And so that was a game changer for us. And then the other thing you touched on, I think point 5, was the product innovation side. Every year, and this is partly because being honest, we fucked up a few times on, sorry for swearing, on the actual product engineering side of things. We got into like the yearly cadence that Apple have. So like every year we were doing the Atlas 1, the Atlas 2, the Atlas 3, and we would constantly innovate, but we were taking feedback from customers. So it was like a community-led thing. And then they were buying into our journey, and there was a reason for people to repurchase. So for us as a helmet brand, like surprisingly, about 30 to 35% of our revenue was from repeat customers.
Wow.
So yeah.
What were they buying? Different designs?
Yeah, upgrading to new limited editions. That was another thing that was like huge for us. We would create like massive hype around there only being around 500 of this new design. And things like that would get people pre-ordering and purchasing like instantly.
I mean, this is an absolute masterclass of how to run a D2C brand. But so, well, let's go back to the journey. So you're running all of this marketing stuff. What like, and at some point you build your own factory in China, right? So do you raise another round of capital, or do you just funding it from this growth to build the factory in China?
Yeah. So in you've seen my LinkedIn post about making my parents millionaires.
I'm a big fan. I've read them all.
So in March 21, I'd just taken it was a £3 million round, and 2.5 million of that went out to my mum and dad, and 500 went into the business.
So you sold your equity?
My mum and dad sold some of theirs.
Got it. Okay.
Yeah, I unfortunately didn't.
So this is like it's like a secondary round. It's not, you're not raising any more money.
500 came into the business, so it was like a token, basically. It was kind of, I think,
you took money off the table, which I guess is good as what happened.
yeah, it was brilliant. Like my parents were able to buy their own homes, and
amazing,
incredible.
And so you don't even raise you basically don't raise any more money. And then at what stage are you building this factory in China?
So that was literally just before that secondary event happened. So what happened was the pandemic hit. We were absolutely flying already, and our factory was delivering between 1,500 to 2,500 helmets a month, but we were selling 7,000 or 8,000 a month. And they were delivering them with such low quality, and we had no ability to get over to China. So we hired an 18-man team in the UK to disassemble and reassemble every helmet that came in. We had no way to get over to fix the problems of quality, like at the root cause. And so made the decision to just lease a factory, talk to one of the guys that I knew really well over there, who worked at one of our other suppliers, convinced him to come on board with us. And remotely, we gave him all the engineering plans, all the floor plans. He would send us pictures of what he's building, what he's assembling.
Is this a guy in China?
Yeah, a guy called Rich Tang. And at the time, he was an absolute legend. There's a total other long story there, but he did an amazing job. And we suddenly had like quality helmets coming through consistently. Supply went from like I said, 2,000.
How much did it cost you to build this?
It was only, it cost about 100 grand to get the assembly side live.
Mm-hmm.
And then we got really weirdly lucky again, where 2 floors above us in this warehouse that I've still never been to in China, 2 floors above us at the start of the pandemic, a Casio watch spraying factory went into administration.
Mm-hmm.
And so for $100,000, we bought the entire floor with all of the equipment already in. And it was like good to go to start painting helmets. So
Amazing. Wow.
$200,000, and we had a factory capable of making 100,000 helmets a year.
So, I mean, at this point, you guys are just set up for explosive growth. You've hit about 50 million. Is it you've hit 50 million now? And then you start getting offers for an exit, right? Is that?
Roughly the same time. So end of 2020 is when that came in.
Talk us through the offers, how they came in, and what happened.
So I obviously had quite a few connections in the VC space. People were...
I mean, you've killed it. You've taken 3 million and you've turned that into 50 million ARR. I mean, like, VC should absolutely love you. I mean, that's an incredible return on capital.
Yeah, well, actually, so 2019, we did actually take another 4 million.
Okay.
So 7 million at this point.
So that was after you built the factory. And what's that going? Why are you taking that? Just to...
So actually, there's a bit in the story that I've kind of skipped, but 2018, we took the first 3. 2019, we took another 4. We basically had a false start with our motorcycle helmet production. Very long story short, worked with a brand called Mac Group in Spain. They'd quoted us like $300,000 to build our helmet, and they were going to build it with their own proprietary helmet shell material, which was supposed to be better than carbon fiber. I was super naive to this at the time, went along with it, paid for all of the tooling, paid for all of the product, went through, and this is actually an annoying thing with motorcycle helmets, is you have to test real product. You can't like test prototypes.
Yeah.
You have to physically make them. And then when we tested it, it didn't pass the certification. So we stalled for like a year, pissed off a load of customers, restarted everything. And yeah, so that's basically where that money went. It basically went for our
same valuation and terms as the previous.
Slightly better, because we'd grown from 3 to 7 in the ski market anyway. So even though we weren't.
So you're making 50 million. What profit is it on 50 million?
So 50 million, that was when we'd actually lost 4 million.
Okay, so you're losing money.
Yeah. But that was actually driven annoyingly by this supply chain issue. Okay. So obviously we had a team of 18 people that we shouldn't have needed in the UK to reassemble and disassemble. But we also got stung in the time when the Suez Canal issue happened.
Yeah.
So we had 8,000 helmets in a factory in China. We'd just done 8 million in revenue for November 21.
Wow.
And if we'd have put them on a boat, people wouldn't have got their helmets for Christmas. And so we had to make the judgment call of, do we air freight them, which typically would be $25 a helmet, or do we make people wait till January and risk a load of refunds?
Yeah.
Decided to do air freight, and the air freight rates at that time went from $25 a helmet to $125 a helmet.
Yeah.
And I am completely 100% kind of like customer focused. I was like, so did that. We already needed to raise a couple.
And then you're losing money on each helmet basically because you're paying $125.
Yeah, exactly. And that's at a point where we're selling them at Black Friday prices. So it was kind of death by 1,000 cuts.
So that's quite unlucky. So okay, so you're basically 50 million revenue, but you're losing money. And then you get offers to buy and how much of the business do you own at this point?
So between us as like a family, like I owned about 20%. Between us as a family, we still owned 52, something like that. Okay. So it was significant. My mum had like 13%. My dad had 7 or something.
And then you start to get offers to acquire the company.
Yeah, well, actually, I've only really just remembered this, but it was a funny dynamic. Start of the pandemic, 2020, suddenly all of the VCs that we'd spoken to in the past were like vultures. I think they thought that like brands were going to really struggle, and so they were like constantly messaging. And there was this one guy called Ben Kirby, really good guy from True. He messaged, but I think he was doing a bit of like vulture investing to be like, if you guys are struggling or you need cash, like we could come in.
Yeah.
And we were like, we're absolutely flying, we're fine. So I think that like that positioning of the fact that we don't need you really got them interested. They'd just done a couple of like big D2C deals. They bought Sneak Energy, and long story short, about 6 months after Ben had first reached out, he then popped up again and said, looks like you guys are flying. We'd love to be involved. What would it take? So I said, BGF wouldn't be interested in selling, but an offer of like 50 million might get them to a point where they'd have so this is like December 2020. I remember I was in like a hotel room in London, and I called BGF to say, I've just had like an offer tabled for 50 million. Like,
and they'd 4x their money in that, right?
What
did they invest at? What valuation?
So the terms on their money was they get the first 7 million out because they've put 7 million in at this point. And then we split the rest of the pot evenly through our equity stakes.
Yeah.
So for them, real rough maths, on 7 million, they'd have had like 28 or something. So it's like 4 times return.
Yeah.
So it would have been amazing.
And what time period? So just when did they invest for this offer?
So this offer is the end of 2020. They came in the middle of 2018. So you're talking like 2 years
to 4. I mean, obviously for you and your family, it's 25 million is like, buy a house on Bishop's Avenue kind of money.
Exactly. And for me, I was actually planning to stay in. I wanted to roll on. Ruroc had so much potential, but for my mum and dad, like they could have walked away collectively with like, I think between them around 11 million.
You didn't want to sell the business at this point, or you wanted to stay working in the business?
I was happy to stay working for the business. I wanted to, get a bit of secondary because it would be nice to like not have money worries. But the main thing for me was like, if my parents can exit with like nearly 10, 11 million,
it's crazy.
Like, it's insane. Exactly. So call BGF, tell them this situation, not interested, like literally absolutely no interest whatsoever. And then I pick up the phone to the chairman. I'm like, this is a game changer. This is like everything we've been working for at this point as well. This is
because you're also losing money. So like,
so at that point, to be fair, we were only losing, I say only, I know it's shit to be losing money, but we're only losing around 1 million. And this is like in the pandemic, and we know that the issues aren't because of like marketing overspend, it's because of operational issues. And so get to the other side of the pandemic and we're, home free. But we're there like, this is a game changing amount of money. Chairman says, well, BGF have the final say on it. Call BGF again. And they're like, okay, well, look, maybe we can do something. And this is where the money for my parents coming in for them. That's how that happened. I was basically able to kind of leverage the fact that True wanted in and BGF didn't want
it. So that's how they sold their second. Okay, makes sense.
Yeah.
And then you had a second offer, did you, for 90 million?
So the second offer was from True for 70 million. So we launched. Yeah, wow. So we launched another brand called Engine Hawk. And Engine Hawk in its first 24 hours did $1.2 million. It absolutely blew up. And True were like super keen at this point because we were just constantly proving ourselves.
So now the investors can 6x their money in 2 years because it's losing $1 million a year.
Literally. And so what didn't really work in our favor, I guess, was that when they'd originally said no to True, and the irony of all this is like it's too much to even understand. So they said no to True at 50. They bought my parents out at 50.
Yeah.
But at that time, they were saying it was worth 100. And then we launched Engine Hawk, which did 1 million in 1.2 in its first 24 hours. And then they were like, well, this is worth 150 million. And we saw all of the problems, and we saw what was actually happening in the business and the challenges that we were facing on supply and everything and cash flow. And they were just like not interested, didn't care about it at all. So they said the only way that they would be interested is if it's like 120, 150 million exit. And so they put us in front of a few different firms, M&A firms.
That was 10x, basically 10x their return.
Yeah, pretty much. Yeah. I think at the end of the day, they just wanted some stupid 9-figure exit. They had no care for the people, what was built, the situation, the general economy or market. They just had a number in mind. So PwC come in and they're like, well, you'll struggle to get like 100 to 150 million, but we think it's worth about 90, which again, it just absolutely at that point wasn't for a number of reasons.
Yeah.
So PwC did like a real half-assed job. They put us in front of 2 other investors. They delayed anything that we were sending to True. At that time, we had like a really good relationship with True. We were like back and forth in constantly. PwC put like a stopper on that, delayed everything. And ultimately, like that deal completely fell apart. BGF ended up being our only option for funding. We shopped around as much as we could, but like I said in my post, like if your VC who's already in like 7 million isn't like coming forth.
So help me understand this legally. This is as a founder, right? Can they can say no to an exit? I understand that. When now they're looking to refund the business, can they say no to other investors trying to invest at better valuations and then basically say no, we're not going to take that, and then force you to accept investment at their own terms and their own valuation afterwards?
Yeah, I mean that is effectively what they did.
Okay, that's crazy. Yeah, that's crazy.
The horrible thing is, I remember in 2018 talking to the guy from BGF, and I actually spoke to him about the exit clause. And I'd said, like, I don't like that. I'd rather be in control of that myself. So it wasn't like I was oblivious to it. But what he said, which at the time made perfect sense, he was like, well, at the point that you guys want to exit, like there's no point in us being in the business. We need you guys to run it. So we're always going to side with you. But it's just a protection we have to have because we're putting in 3 million. And so it all sounds great. And then when the money's in front of you and they're thinking they're going to get a 10 or whatever X. Yeah.
This is the thing. Like the VCs go, oh yeah, it's just in case, like it's not going to happen. There's like, well, it's just in case it's not going to happen. Like,
why is it there?
Why did the founders have the final say? Why did they have the final say? So okay, so this saga happens, and then basically the relationship unravels. Can you speak about what happened afterwards?
So December 2021, like things are getting really tight cash wise. We've shopped around everywhere, venture debt, VC. We'd just paid back like 2 million to Wayflyer. And they put terms in front of us to put 4 million in. And the thing that they'd said in these terms was that I have to let go of my CFO. He was like their scapegoat. He is like, honestly, the guy's a fucking genius. He now runs like the biggest e-com CFO agency in the UK.
And you guys have gone through the pandemic. You've been airlifting helmets. You've had the Suez crisis. Like,
literally,
it
was scapegoating at its worst. And then the other term that was in there, which was a real sticking point. So it was first like, you got to get rid of your CFO. The second one was for whatever money they're putting in, which was obviously 4 million. They're guaranteeing themselves a 4x return. Plus, there's an interest payment on it.
Oh my gosh.
So it's like the most horrific terms ever.
Outrageous.
So literally said to them, fuck off.
Yeah.
Told them that the guy who was on our board at that time who put those terms in, he was no longer on our board. I did have the right to request a replacement, so I did that. Brought a new guy in who was even worse, which is another story. But we decided to battle plan, which is basically where we said everyone we owe money to, like, we know the situation. We're gonna be able to get to the other side of our next product launch, and then we'll start paying you guys down. All of our creditors were super supportive, even Facebook, which was crazy. And so we pushed out creditors. We brought forward a product launch, and this product launch was supposed to do 4.2 on day one. We've never missed a target on a launch. We did 3.3 on the day in 24 hours, and our growth
is this?
$3.3 million on day one of the launch. And when we used to do these launches, we would see a mad spike, and then we could almost every time map out our decay rate and where the daily run rate would settle after that. And it settled at like $150,000 a day. So it landed where we needed it to after the event, but we missed target by like nearly $1 million, so $900,000. So the air freight thing, the missed target, and our overage costs on repairing product that was coming in from China the previous year basically made our cash requirement go from like 4 to 5. And at that point, BGF called me and said, we're not going to be able to back you as a team. So now it's not that you have to get rid of your CFO, it's that the two of you are being removed from the company.
Crazy. Yeah. And so you leave the company. Let's just round up the story before your reflections. I think the company has basically collapsed. It's a shadow of its former self since the founders left. Do you want to just touch on what it looks like now?
So from what I've been told from people there, like revenue is at around 10 million. They've been loss-making.
Wow.
Yeah, loss-making ever since I'd left, even though 2021 was the first year that we had full production, able to go on the water, sea freight from our new factory that we owned. So that was the first year we were supposed to come out of the pandemic and switch to profitability. But unfortunately, there's just no one there who really understands e-commerce. So
yeah. So from this, I mean, thank you for sharing. First of all, like an incredible story. In terms of the takeaways, like as I listen to this, the first takeaway I'm thinking is profitability sounds like it should have been focused. Would you agree?
Yeah, it's one of those things that because of the complexity of the helmets themselves and our ability to get out to the factory to fix like engineering issues, it wasn't that we weren't focused on profitability. It was that it was just basically unattainable without us pretty much firing all of our staff and accepting for 2 years that we were, just hunkering down to nothing. And that just wasn't an option. So it wasn't a case.
So what will your takeaways be? Just from everything, not just running the business, but from raising the capital, from everything.
I think because I was quite young when I first took the money on.
Mm-hmm. How old were you?
27. So not ultra young, but still in my 20s. And I think the main thing was that I kind of deferred to the knowledge of the people who were coming in, and I assumed that they knew better than me. In reality, even to this day, like I could go in and run and fix Ruroc tomorrow. Like I am the only one in the world who understands and knows that business like back of my hand. But I deferred to the knowledge of these other people who I assumed knew more.
Are these advisors or these investors?
Advisors and investors, like our chairman, our non-exec, and the investors.
Yeah, so I think that's a big one. Like advice is very easy to give, right? But actually, I think like it's why I love doing this podcast. I think what's more interesting is just like listening to people's experiences and trying to learn other people's, I don't want to say mistakes, but experiences and journeys, and kind of apply that in your own way to whatever you're going through. And that's almost a better way than like someone saying, oh, you should go for profitability. Because I don't know the business. I'm just what I don't know.
I think touching on the founder manager mode thing that's been out recently, like there was this belief in me that actually there must be a better way to do this. Like we're growing like 100% year on year, but like someone better than me must be able to do better than this, and maybe I'm holding the business back. And so I always had this thing about like, oh, I've got to build a team and I've got to bring more people in around me, like people who know this better. But actually, in reality, there is no one who knew that better. And
did you make hires that were a mistake? Did you bring in managers who were?
Oh yeah, definitely. Yeah.
Do you want to talk about that? Because I'm hiring right now, so just my own curiosity, like what are the learning?
For Ruroc, like I said, marketing we kicked ass at, product we sucked at. And I thought the way I could solve this was to bring in a brilliant product director. So I hired a guy from Samsung who had previously worked directly for James Dyson at Dyson. I have never met a more incompetent and useless person in my life. And there is just no extent to which I ended up firing that person within 2 months. So I made a quick call on it.
But go on. Sorry. No, go on. Finish.
But some of the things that were like coming out of that, and like the wasted time and the energy, like, it is ridiculous.
Basically, the big logos on the CV don't matter. Like, how did you? Were you attracted to that hire because obviously, like Samsung and work for James Dyson? Like, wow, like, could you, like, in retrospect, looking at the interview, could you was there anything that was a giveaway that this person wasn't?
Nowadays, I can completely spot it. Like, there's people it's people who they're fantastic at talking and presenting, but actually what they physically deliver, it's hard to quantify in like an actual interview. But I now just don't hire corporate people, like people who know startups. Like some of my friends who joined the company early, like there's a handful of people from Ruroc who are literally world class at any level that they want at.
I was corporate before I did this, right? I spent 6 years in Amazon, so I don't think you can just say.
No, I know what you mean, but
how when I'm doing it, so I'm interviewing people, I'm hiring a head of sales, head of customer success. How can I, what can I do in the interview process to check, like, if they have a fantastic CV but like, are they actually going to be able to deliver this? Is there anything that you've learned in interviewing?
It's hard to say. I think I just try and have like as natural and as long a conversation as I can with them to understand just kind of what type of person they are. Yeah. The other thing is I really just directly ask if they understand, like, clearly that it's not a case of, particularly in startups like we are today, it's not a case of you come in and you start writing a strategy and you start like putting a presentation in front of me. It's like, I really don't care. Like, this is what your area is and you need to do this and you need to own this. And if you're not doing these things, it's a case of you're gone. Like,
and what's the best onboarding path so you get a new hire in, from your experience, like how do you make sure that people are owning, delivering, and they're not just kind of wasting time writing stuff and commenting on this and that?
I think you just know, particularly at this stage, like there are so many jobs to be done. There is so much work to be done in a startup. If there's no tangible results within the first like 4 or 5 days, it's really unlikely that you're going to see anything impressive, in the long term. Literally everyone who's come on at Demandly, my new startup now, is ex-Ruroc. Some of them are working other jobs, so I can't say who they are, but they literally, like the evening that I've told them that they're part of the team, like there's output. And for every person who joins Demandly in the future, if it's not a case of like week 1 we're seeing value, it's just not the right type of person.
That was I did Techstars, as you know, but I also did this incredible like 4-day workshop with Yuri Levine, who's the founder of Waze, and
cool.
he's Move It. He's got 2 unicorns. The guy's a genius, and one of the things he talked about was he called it firing and hiring, not hiring and firing, but he said firing and hiring because the firing is more important. And basically, after you hire someone, you put a little note in your calendar for a month later, and you do one of 2 things in that meeting. You either say you're great and I'm going to give you more options in the company, or this isn't the right fit for either of us, and goodbye. And like it's one of those 2 things that you do.
Yeah, absolutely. I think as well, Ruroc, we kind of prided ourselves on having like really strong talent density. The second you put someone shit into the mix, everyone else, it just affects everyone else, and it's so obvious. So these days, the second someone is causing a problem, they're just gone. Yeah.
Okay, so wow. I mean, there's a lot. Is there anything else? I want to ask you about what Demandly does and what the future looks like for you. But anything else on this and reflection that you want to cover?
I think one of the things that I regret about the end at Ruroc, which I think really every founder should take on board, is no matter what you're being told by the VC that you're working with, like until the absolute like last minute, that company is yours, and that company is like yours to dictate the future of. And in reflection, I feel like I probably gave up too easily. I knew we were up against it cash wise, and BGF had basically told us that they weren't going to put any money in unless we step back. But I really should have just fought harder until the very last second.
Till the bitter end.
Yeah, literally. But I rolled over because I thought it was like the company needs 5 million injected. All of my friends are on payroll. This is like the entire team. If I'm that selfish guy who fights to the bitter end and then like nobody gets paid, that's awful. So but
it's a really tough place mentally, to put someone in that position, right? Like, it's horrible. I think like another reflection is just from your story, like you shouldn't give up control early you basically, as we discussed, kind of did it in the first VC round, put them on the board, when you're still maybe figuring things out and you're not pumping out the cash yet. Like it's too early. You've got to keep control of the company until, ideally as long as possible. And I mean, maybe even turn down VC money to keep the control. Would you say?
So I mean, in the US, that doesn't seem to happen. Like they're a lot more founder friendly. Like the first round is always on safes. And so they respect the value that the founder brings. That's 100% why I'm just not raising money.
What's your reflection on the UK? So, we're both British. I was in Techstars, San Francisco, so I spent 4 months out there. Totally different world to the London ecosystem. I have a great VC here. Like, I'm very grateful to them. They've matched the terms of our Canadian investor, which is we got 2 term sheets from UK investors, and one of them tried to take control, very well-named VC, and we basically said no. We're not like for follow investment, we're not going to put you on the board. But yeah, what's your reflections on that? If you have a few minutes
on the UK in general.
On the UK.
So actually, last night I saw I think it was a Telegraph post of Ben Francis saying that the UK needs an Elon Musk, and I ended up tagging Harry Stebbings from
he's great.
So we back and forth a few messages, and I genuinely think, sounds maybe sycophantic, but I think that guy is probably the only hope the UK has in
Harry Stebbings or Ben Francis.
Harry Stebbings, unless Ben moves into like venture, which would be a crazy move, I guess. I feel like the only one doing anything innovative to drive innovation and VC funding is Harry Stebbings. There is nothing else that's like of note in the UK from a venture perspective.
Yeah.
And one of the big things that really frustrates me is like, we've obviously got brilliant universities with brilliant people like Cambridge and Oxford. I can't remember whether it was Cambridge or Oxford that DeepMind came out of, but DeepMind was sold for like an absolute song, and that should just never have been allowed to happen. But if the venture community in the UK was bigger, more dollars would have gone into DeepMind to keep it, you know, UK based. But now it's a Google thing, and it is like probably it's far and above, I guess, what OpenAI have created in the way that it's doing, like the fixing things like the protein folding problem.
Yeah.
Like this is like game-changing stuff that we've just let leak out of the economy. And so I just feel like it's going to take a Harry Stebbings type person to create like a Techstars Y Combinator style thing in the UK to start properly funding innovation. But the UK, as far as I'm concerned, right now,
we need some structural change, and I think SCIS and EIS, which has been established for like 10 years, is very good, right? It's a very good program, and I think the fact that it puts the investors on common shares is excellent for the founder. So you don't get this kind of, oh, we're going to take the 4x return before you get anything kind of stuff that you discuss. Like if you're doing SCIS or EIS or on common shares, they're with you. Yes, like they can get a board seat, but also like if you're doing a 250k investment, they should not be getting a board seat. Like that's just, you know, and there'll be others that hopefully shouldn't. But I agree, like as we get to the later stages and also IPO in the UK, like it just doesn't make sense because you know, we need the ecosystem to be built out more.
To be honest, I really think the crazy thing about EIS and SEIS is actually that every angel that I've spoken to in the UK, they're not really interested in your business. They're interested in their tax break. And what that means is you don't really have people who are properly bought in. But over here in the US, like the angel market is so hot because IPOs do regularly happen. I know it's been like there's been a couple of dead years, but people do see a route to an exit.
Yeah, but I think just to play devil's advocate, I think actually when we came back from San Francisco, as a company to the UK and looked at SCIS and EIS, people wanted to put money in because of the tax break, and that's a good thing because they risk like 20% of their capital at the end of the day, whatever it is, but people are willing to fund early stage startups, and angels are basically willing to meet the valuation that we said, right? Like they're not sophisticated investors. We say this is a valuation, they go, okay, great, like sounds good to me. Like, and if they say no, we go, okay, bye.
Yeah,
but you don't want to be the valuation, you don't invest.
But I think the frustrating thing for me is that actually without that incentive, those people will typically invest. Whereas in the US, the mindset is so much clearer on the fact that they're supporting entrepreneurs, they're supporting people like themselves. They're actually like pushing and hoping that you will be the next big IPO. But the reality is in the UK, like when Deliveroo, who's like one of the last big ones to IPO on the LSE, it's like they've absolutely tanked. And that should be a phenomenal business. Like DoorDash over here and Uber Eats are massive, and Deliveroo
it might still be when we get robotics. When they get the robotics sorted, which will probably be a year or two's time, it will be a fantastic business. Do you have time for 2 more questions?
Go for it.
Yeah. So number one, you just did Techstars, and then I'm going to end up asking about Demandly. But number one, you just finished Techstars, right? You know, I'm ex Techstars. I think that's how we got connected. How what was the key learning from your Techstars experience?
So we came into Techstars. We had a brand called Dobby. We were trying to make AI agents to run the operations of your entire e-commerce business. What we learned from Techstars was that although conceptually, that's great, why wouldn't I have an AI agent to run my business? The reality is that was not only a hard sell, it wasn't like a particular pain point for people. And so Techstars really taught us to focus on the pain point. And I'm sure you've been through this, but the whole customer discovery call motion, where you're just chatting to people, just understanding what's your day-to-day like, what how does this happen? What are you using for this? And then without like leading them, understanding what their pains are, and then just hitting them with, look, if I could solve this for you, would you pay me $199 a month? And the surprising thing is the amount of people who actually say yes and are willing to commit a credit card is, it's actually insane. And so it really gave us a process to find out what the pain points were for people, for us to solve an actual problem. And that's ultimately...
Was it the jobs to be done framework that you used? Or
no. So we had an MD called Andres Barreto, absolute brilliant guy. I think he's got like a totally different take on a lot of what Techstars is doing.
Interesting. I would agree. We spent 2 months doing jobs to be done, which is customer discovery, and it really is. It really is transformational, and also kind of we now spend, let's say, like every 6 months we go back, we do like 20 customer interviews, existing customers, new customers, because you like the insights change, and you need to okay. Last question, Demandly. What's Demandly?
Cool. So like I said, Demandly was born out of that actual process. And from all of our customer discovery calls, we found that still everybody was using spreadsheets to plan their demand and understand what they needed to order and when they need to order it. So we're calling Demandly the first simulation engine for demand planning, which where you're basically able to set various different forecasts for every individual channel that you sell through, whether you're selling through Amazon, Shopify, WooCommerce, Walmart, whoever. And then it produces, and you can interact with this, a purchasing schedule for your currently live SKUs. What we found was that still to this day, people are like using random disjointed middlewares to try and link everything together, whether it's through Looker Studio or whatever. And no one's got a real clear handle on what stock they've got, how much revenue they're going to potentially lose if they don't place an order today. And one of the big things that kind of actually killed us at Ruroc, I mentioned about the 8,000 helmets for that Black Friday in November 21. I had to make a decision within like 24 hours to decide, should we air freight this? Should we sea freight this? What's the cost? And basically Demandly simulates all of that for you and shows you how much profit you will make in each different scenario. So we're just solving a problem that I've felt very acutely.
Amazing. Well, we'll definitely hopefully do some partnership stuff.
That'd be awesome,
thank you so much for coming on.
No, thanks for having me.
Telling your story. If people want to get in contact with you and maybe talk to, like, are you live with Demandly? Can they do?
If you drop me an email at dan@demandly.com, or you can find me on LinkedIn and message me there.
LinkedIn's the best one, is it?
Yeah, probably.
Okay, so we'll link that, and it's just been a fantastic conversation. So thanks for your time.
No, thanks for having me. Cheers, Max. Really appreciate it.